information about short sales and the taxes people may owe. So if you look at the top of this, here's my disclaimer. I'm not a tax professional and I'm not allowed to give tax advice per se, but I do want to hand over some interesting information. First of all, these are the times when you don't have to pay property taxes. Now, there is a difference between property taxes and capital gains taxes, which I'll get into. Bankruptcy, if you're living in the property, or if you are considered insolvent. What is insolvent? Real simple. Your tax person can work up an insolvency letter for you. If you have $40,000 in assets and you owe $40,001 in debt, you're insolvent. So that's real simple. So that's why people rarely pay taxes on short sales. Little note, there's never a time when a foreclosure makes more sense than a short sale. There might be certain attorneys that don't understand that, and people think, well, they're attorneys, so they must know what they're talking about. Oftentimes, they are experts in their field. However, if someone tells you the opposite of this, check and see if that attorney is a real estate specialist or a tax specialist. Usually they are not, and they don't understand the new rules. A foreclosure doesn't relieve you from any tax obligations. And just because you don't have property taxes to pay doesn't mean there's no capital gains tax. Example, if you bought a home 20 years ago for $100,000 and it's worth $500,000 now, you may have to pay capital gains tax on that $400,000. You wouldn't pay necessarily the $400,000, but you'd pay taxes on that as income. Even if your home was worth $1 million and you pulled money out when it was worth $1 million, now it's only worth $500,000. You still bought it at $100,000, so you pay on the difference. A bankruptcy, claiming insolvent, or a foreclosure doesn't relieve you of capital gains taxes. However, if it is your primary residence, a single man gets a $250,000 and a married man gets a $500,000 capital gains exemption. So oftentimes people don't have to pay any capital gains taxes. When would you have to pay capital gains tax? Well, here's a question. The property is not your primary residence, meaning you have it rented out. You owe $1 million on the home and you're short selling it for $500,000. You bought the home for $100,000 20 years ago. Would you still have to pay capital gains tax even though you're upside down on the home? Yes, you would, because it's not your primary residence. If you owe more than your home is worth, what are your options and how much would they cost? Well, there's 3 basic options that make the most sense. Now, there are 13 total options, but there's only 3 options that make sense, usually. Bankruptcy, the cost depends on what type you do. There's Chapter 7s, there's Chapter 13s. There's ways you can do a bankruptcy and keep your home. I'll put that on a later video. We'll talk about different ways to do that, and I can refer you to an attorney to give you more information. Short sale, my team and I do them for free. Our goal is to have you pay nothing to anyone. So basically, if you do a short sale, you don't pay us anything, and 9 times out of 10, you don't pay anyone, including the bank, a dime. And a loan modification. So if you're thinking of trying to get your payment lowered or get a loan modification, we'll coach you through it for free. We'll tell you how to increase your chances. It's about 2 to 4% are actually going through, and we'll help you to get in that 2 or 3%. If someone comes to you asking you for money for that service, be very wary. It's often simple to find out up front if you can't qualify. Example is if you lost your job. Here's my contact info. Call or text me. Shoot me an email, buynsd@gmail.com, or go to sdshortsells.com. You can get some of the information I just talked about and more.